Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Monday, February 24th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here at March corn down 4.5 at 486 3/4. March soybeans were down 1.5 at 1038, and March Chicago wheat was down 9.5 at 580.5. No export sales announcements here this morning. We are now through 14 out of 19 settlements for our spring crop insurance discovery period. Corn right now is sitting right at about 472 with soybeans at 1057. Good morning, fellas. Looks like coming off of Friday and then certainly to this morning, much wetter patterns through Argentina. Models are calling for pretty significant amounts of rain here in the next 10 to 14 day time frame. It looks like that's kind of eased a little bit of our markets. We also saw a pretty big drawdown in open interest coming off of option expiration. Corn open interest down 88,550. Soybeans are down 24,190. So we will have futures first notice day, March futures first notice day here coming up on Friday. So a lot going on this week, guys. We're going to wrap up our crop insurance pricing, which by all accounts is hard to really move here the last week. We've got so much of it priced in. So that'll be interesting to see where we settle. But Dustin, maybe a few thoughts to kick us off here this week, and then we'll throw around the room.
Yeah, Dan, thanks. I think it's that time where we've seen enough of that insurance price established, like you said, and we did have a fairly low ratio. So like in years like 2023, we did get some sell-off there, led by corn when that the confidence was there that we were going to get plenty of corn acres through a high enough crop insurance guarantee. And I think that we might be at that point here for this year as well. That there's a lot of wind in everyone's sails to go plant corn. You have those lower deductible insurance policies that are going to be popular this year, I believe. The other thing, Argentine weather also helps, but you have to think about loan renewal season. And last year, the low was made, a hard low for the 23 season was made basically Feb 26, 2024. And why is that? I think a lot of it has to do with trying to get things wrapped up and cleaned up for the March contract, and try to, get that balance sheet in order for loan renewal. Anything that was delivered, though, that was paid on a basis only contract in the months of December and January and Feb, all of those basically have to come to a point right now. If that futures price has not been set yet, those growers are getting calls this week saying, hey, do you want to roll this or do you want to sell it? Right. And we've had a pretty good rally for them to, I think, have the confidence to probably opt in to sell. So you might be getting a little bit of pressure as we get to the end of that Feb contract or that March contract at the end of Feb as well, where you're just getting a little extra grower selling because of the calendar.
Sure. And one thing to note too, Dustin, we're going to get Feb Outlook conference kind of towards the end of the week, which will be interesting because that's where they'll show us some balance sheets out forward here for this upcoming year. And we've talked about it a number of times, but you back into some acreage and some preseason yield estimates. I mean, they're probably going to write down a yield that people are going to yell about, would be your guess, wouldn't it?
Well, I think, they actually did, I think, concede a little bit on that, rightfully so. Last year, they, it wasn't as high as everyone was kind of projecting them to be on their exponential moving average. Mm-hmm. The yields, certainly, I mean, I think there's some arguments to be made that we haven't been able to really breach that 180 number in corn, and I'm certain they'll publish something above 180. The acreage is going to be a big one too. I mean, everyone keeps talking about, how, corn is going to see 95, 96 million acres and it's going to tank corn. well, what's that mean for beans if we get 83.5 million bean acres again, 83 million bean acres? I don't think the balance sheet is that easy when you start to make that same assumption about what bean yields have gone through in the last 5 years, coming in below estimates. So I actually think that there's the market's called for more corn acres, and I think it's going to get them. I think you're going to see that on the Feb outlook for them as well. But I do think the bean story is not necessarily written in stone, that this big, Brazilian bean crop that we just came off of is necessarily going to translate into a big bearish year for beans. It doesn't, we still have to go out and grow a bean crop with less acres in the U.S. It's not necessarily a slam dunk going to be an abundant balance sheet there.
I saw polls are worth the price you pay for them, but I did see a kind of one of the first polls out from analysts this morning with corn acres kind of coming. It's like 93 to 93.5, with the higher end of the estimate being 95. And I thought that was interesting because we talked a lot last week just about, we believe that the market at this point is kind of digesting that 95 number, given where we're at with the ratio and everything so far.
That's just what we've seen anecdotally from, maybe it's the louder analysts have been out talking about 95 million acres, I initially thought that would be way too high when we first started hearing these back in, the early part of the year, before the ratio really took a dive and before we had this nice flat price rally that we had in December. I do think, though, you just look at beans for a lot of these acres that are in question. And I guess we've heard a lot of it anecdotally, guys that are choosing a bit more corn on corn acres now. Beans are just really low price compared to where they were last year. And we have a natural rotation back over to corn coming off of the 24 acreage split. So I would have been in the exact opposite camp back in December. I would have thought, no way we're getting to 95 million corn acres. But you get an insurance price as high as you did for corn and as low as you did for beans. I think that you are getting some of those momentums back in that direction.
Yeah, there's a path there for sure. Ben, what's on your mind to start the week?
Yeah, kind of in the same camp of Dustin this week. First notice day is a big deal for our markets. I think we mention a lot on here about how to handle uncertainty and how to look at those things. And when you get that call this week, and this is not a recommendation for anyone, but we could have massively large corn acres, and we could still run into some things that could be problematic price-wise, flat price-wise. So if you're looking at the question from your local merchant of, hey, do you want to roll to May? You got this basis contract and the spread's trading 14 cents, or you can go out and, maybe you deliver that corn at 430 or 440. You've picked up a tremendous amount on it. I think you have to look at the consideration of pricing the corn and owning calls, because you can do that cheaper and maybe extend your length and have the certainty of those bushels have a floor on them and are sold now. Maybe it's not for everybody, but that is one way to deal with uncertainty and create a certain outcome. I also think something that's important going into this week, knowing that those phone calls are going to be made, there's been a lot of chatter about how much corn, old crop corn, is the grower sitting on. And unequivocally, at the end of this week, it will be less.
Yeah, no, that's a good point. And we will, as we've talked about ad nauseum, we are in the process of doing a really deep dive and analyzing crop insurance decisions for our clients. And they're starting to really, really ramp up in this next week because as we've talked about with the price virtually being set, I mean, it takes quite a bit to move that price here this week, given the percentage that's already been locked in on the settlement side. Do a deep dive this year. If we can give you one bit of advice, is do a deep dive on your crop insurance. It's not a year to be complacent. There's a lot of products that we've looked at, a lot of different ideas that you can throw around that could really put you in a driver's seat before you go to the field. So give us a call if you want to chat about that. We'd love to visit. Ryland, we got a couple minutes here. Livestock, cattle on feed Friday, very neutral-ish from what I could see. Placements and marketings came up a little bit short, but overall, like I said, pretty neutral. And then, it feels like much of the hog break here is led by April. So what are your thoughts as we kick off the week?
Yeah, no, the report came right in line with expectations, or at least pretty close. I think there's, depending on which analysts you follow, there's been a lot of back and forth with just, how far below expectations was the actual placement number. But I think some of the more interesting things was just the big decline in Texas placements, and I think that's indicative of the border being closed and the ban on feeder imports from Mexico. So I think that we're, now that that's kind of passed, um, I mean, there's definitely new protocols in place, but we'll see if we see more impacts of the border reopening on the next report. And so overall, it definitely has maybe a little bit of a friendly vibe to it if you're only really focusing on the placements, but we know those numbers are likely to probably start to pop up. So overall, you priced in a lot of that. And the focus is really going to be on the beef market this week. I mean, we had choice making new lows for the move down to 310.77. It was down to $1.86. And then the cash trade, we saw 199 trade in Kansas and Texas. So we're sub $2. It's kind of that psychological level. And this is kind of the danger zone. We're in the seasonal down as far as the futures go. So we'll see if that starts to kind of dissipate in the next few weeks here. So just overall, just kind of watching beef, seeing if there's going to be any early cash indications. The managed money is still really long in the live cattle market and the feeder cattle market, but they have been starting to taper a little bit. They let go about 7,200 contracts last week. And they're holding 128,469 contracts. So still very long. This market doesn't seem like they're totally bailing yet, but we are kind of below some moving averages that are of concern. As far as the hogs go, same thing. You finally got April down below the 100-day, and we are finally starting to see some support come back into the cutout. Bellies were up almost $8 here on Friday. Cash is back up, so there's a little bit more optimism. And if it holds the recent trend, it seems like we take April right down below the 100-day, and then we spike right back up and make a new high. So we're going to keep an eye on this. I mean, it's happened twice before. Third time's a charm. But I don't want to get too excited. I mean, there's going to be a lot of focus on the cutout, and if the cutout and bellies especially start to see a nosedive this week, maybe that trend does not continue. So it's just going to be a lot of focus on those numbers in the midday.
Very good. Appreciate the update there. One thing to point out, Jack will have more info in the outro there, but we got our special deal once again running through April 1st. So give us a call. You want to talk about crop insurance, how it fits in with marketing, be more than happy to visit with you. So reach out, give us a shout. We'd be more than happy to visit. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. It'll keep you up to speed on everything that's going on with AgYield. And sometimes we'll put out special updates and things like that. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. I hope everybody has a good start to the week. We look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.